Are you constantly getting stopped out of trades and don't know why? Are you wondering if you should carry trades into the next day? Well, in this video, I'm going to show you one simple tool you can use that can help you make that decision. What's going on, everybody? Today I want to talk about something that's really important when trading, especially when you're scalping the market. When should you close your trade? Should you close it near the end of the day or carry it into the next day? Now, oftentimes you might find that you're targeting an area for your take profit and it hasn't quite reached it yet, and you're coming to the end of the day. You decide to hold on to the trade, and then you notice when the market opens back up again, when you look at the chart again, you see that you got stopped out of the trade, even though price didn't come to your area. So you're wondering why this happened. You're starting to question if Forex is a scam. Now, there's a simple way to know if you should stay in the trade or not. Now, at the end of the day, when the market closes, spreads open up. And I want to show you as an example here. Look here, when it shuts down for the weekend, which is the last one was the 5th for me. It would close at 5 p.m. and it would open up again Sunday at 5 p.m. And when this happens, the spreads open right up, quite a bit actually. So even if you have a little bit of gain, it may not be enough to protect you from getting stopped out. So when we're looking at this, there's the transition from the 5th to the 7th, and we can see just this alone. Whoops. The market moved about 6 pips. So I want you to keep that in mind, that I've seen it sometimes move 10 pips. I've seen gaps, 10 pip gaps. You really don't know what to expect. So expect that you're going to get some type of movement. You don't know if it's going to be in favor of your direction or not. So now that you know that, when we take a look, we have a simple tool here that can tell us how much the spreads will open up. So if we jump onto Oanda, I'll leave a link in the description if anybody wants to check this out. But we were on Euro USD, so if we go to Euro USD, what you can see now, remember how the market was closing on the 5th and opening up again a few days later. And you can see that on this particular pair, the maximum spread is 10 pips. And if you keep in mind what we were looking at earlier, where we seen 6 pip movement, that tells you that if you're trading Euro USD, what would you want? Would you want to be 20 pips or more? Maybe even more than that. Who knows? But you don't want to be too close because there's a chance that you're going to lose a good trade because of this. Now, if we take a look, and let's say, it's another good one, CAD JPY. We look at this one. What do we see here? Well, if you were trading this pair, the maximum spread that could possibly happen is 20 pips. Now, if I was trading this one, and the fact that I know that there can be gaps or some type of movement from the candle that could reach maybe 10 pips, could be more, I want to be at least 30 pips in profit before I even consider carrying a trade into the next day. It just makes sense, because if you do it any other way, the chance of you getting stopped out is a lot higher. So what can you do? Well, if you're getting to the near the end of the day and you don't have those type of gains, you can see historically what Oanda says these pairs move at. And if you're stuck within that red zone and don't have enough buffer away from that, the best thing that you could do is just close the trade down, because you could end up just losing trades that could have potentially given you some return, but because you decided to hold on to it, they ended up catching you in this. And it doesn't matter which pair you trade, you can check any one of these. GBP AUD. You can see on this one, there was times that, what do we see here? Maximum 50 pips. So if you see something like that, I think that's a clear indication that you're just not going to trade into the next day. You'll wait for the new day to start, and if a potential trading opportunity comes at that time, then you would get into it. But I wouldn't consider holding on to a trade if I seen something like this. The risk is too high of getting stopped out, and especially if you've been holding on to this trade for several hours. The last thing you want to see is you losing a trade because the spreads widen up. So hopefully this adds a little bit of transparency for you. I'm not sure if you've been getting stopped out on any trades, but anything that you see me doing on here, if I hold on to a trade into the following day, the only reason I would do that is because the information I see from Oanda, and I look at that pair, what kind of candle movement it potentially gives. I look at each day and see how much it's moved at the end of the day, and so I know what to expect, maybe get an average from it. And if I'm in the plus, exceeding these numbers, then I'll decide to do it. Whatever pair you're trading, just come over here onto Oanda. You can easily search this up yourself and just find the pair that you're trading. You can see here's an example again, AUD USD. So you would see that potentially could be a 15 pip spread, and then I would take a look on the charts. And again, you would have to take a look further back, but you can see what type of movement you can expect. You can check back several days to see to get an average from this. So when looking at this can give you a rough idea between this and looking at the historical spreads on Oanda. And then you can decide. But really the best thing that I have found is just to close the trade at the end of the day, before the market closes, unless you have a significant price difference between where price is and where your stop loss is. I hope you found this helpful. I hope this explains to you why you're getting stopped out, or if this is just a question you had and you haven't come across this yet. This channel is all about making things easier, so hopefully you got some value out of this. And if there's anything you would like to know, leave me a comment and I will try to get back to you.